Eu confesso que tenho certa dificuldade de apresentar nosso convidado num evento como esse. Em geral, em mesas como essas, nós apresentamos o colega de uma universidade, lemos parte do seu currículo acadêmico e listamos aqueles feitos que lhe deram reputação. Bom, com exceção desse último quesito, os feitos que lhe deram reputação, Michael Roberts não se encaixa bem nesse perfil. Aliás, Michael Roberts sequer se chama Michael Roberts. Enfim, sendo esse apenas uma espécie de nome artístico que o nosso colega assumiu para evitar constrangimentos no trabalho. Bom, diante dessa dificuldade, eu decidi ler aqui a apresentação que ele próprio nos oferece no seu blog. Michael Roberts trabalhou, na verdade, durante 30 anos na City de Londres, ou seja, na Bolsa de Valores de Londres, como economista. Ele observou de perto as maquinações do sistema financeiro global no olho do furacão. Roberts vem seguindo a visão de mundo marxista há mais de 40 anos. Assim ele se apresenta no seu blog, e eu queria dizer que, bom, a gente entende por que ele usa um nome artístico quando se trata de se pronunciar como marxista e comunista. Para alguém que trabalha na City de Londres, sem dúvida, isso é importante, para não causar um constrangimento com o chefe. Bom, quanto aos feitos desse notável intelectual, aqueles que nos interessam mais de perto são os seus afamadíssimos livros A Grande Recessão, Uma Visão Marxista e, mais recentemente, A Longa Depressão. Com vocês, Michael Roberts.
Well, I'd like to thank everybody for inviting me. Sepp, and I think you say oof, don't you? For inviting me to this very important conference. It's an honor to come all this way and to be invited to participate in this event. And looking through the papers which are taking place in various sessions today and tomorrow, it's impossible to go to every session and feel that you have gained all that you can gain from this conference. I've asked for every paper to be translated from Portuguese into English and sent to me immediately on the email tomorrow. The organisers did not feel they could meet this request at the pace required. But nevertheless, you have the opportunity now to listen to what I've got to say. And one of the things I'd just like to mention on your poster, it was mentioned about the building in Rio. Is that correct? Where this terrible fire took place and people died? São Paulo. Well, of course, you may know that we had a similar incident in London, in Grenfell, which is a tower in the centre of the richest part of London, but with one of the poorest group of people still in public state housing in a tall flat. Burnt to the ground, and something like 78, maybe more people killed, plus all injured. The government, our Conservative government, said, we will house everybody within 3 to 6 weeks and the problem will be solved. It is just coming up now to 1 year, and the people who have lost, didn't lose their lives, are still not housed and are still in temporary accommodation. And the Prime Minister told the Grenfell residents in the inquiry, sorry, we'll get round to it sometime. This is an indication, perhaps, of the consequences of austerity, which is what I want to talk about today, because the austerity involved here was the complete cutting back of all the funds available to maintain to a decent level of health and safety the regulations for flats and housing that are owned and controlled by the state and the public sector, and also doing away with regulations, up or down? Up, down, yeah. The regulations have been removed for set health and safety fire regulations across the country in order to save money for the government and and also to provide for building employers the opportunity to get cheap deals. And this is the result, just one tragic example of austerity. But before I go into my account today of the nature of austerity, because that's what we want to talk about, I just want to make two apologies, and I should have made this earlier, really. The first apology is speaking in the language of modern imperialism, the Anglo-American English. You are forced to have it translated into an older version of imperialism, Portuguese. But as we've discussed imperialism already, we don't want to go down this road further this evening. The other apology is to recognize that I shall be presenting a great deal of graphs. There will be a lot of graphs. I am usually criticized, Michael Roberts is criticized for having too many graphs. My sister says to me, I read the first paragraph of your blog post and then you have a graph when I stop. It's too much. Normally the complaint is too many words, but in my case it's too many graphs. And yet there is a health and safety warning here, and the health and safety warning is the question of statistics. As we know, those who were in the first year undergraduate courses of statistics and economics, at least as I remember, it was lies, damned lies, and statistics. And I shall be presenting a lot of statistics, and you must take them with the health and safety warning that applies to all of them. So the first thing I want to discuss before I even move on to the first graph, you could be here some time, is that is the definition of austerity, because this is, if we're going to discuss austerity and its role in the recent period, we need to discuss the question of what we mean by it. And we know the consequences of it. I've briefly discussed that in the relation, but what do we mean when we come to the economics of austerity? There are various possibilities. A reduced government spending on public services, jobs, pensions, etc. Perhaps more specifically, a positive surplus on annual government budgets when you don't need them, before or after interest payments. In economic terms, if it's excluding interest payments, we call it a primary surplus, having a big primary surplus to save the government saving money that perhaps it doesn't need to do, or maybe falling government spending as a percentage of annual GDP. That's another example. And a general budget surplus as a share of GDP. Now I'm going to bring those definitions of austerity into the process as I go along. So number one is the latest position on these budget balances in the major economies. You can see that Germany is running a surplus, but this will be not the question I'm particularly interested in now, but you could say that it's running a surplus because it's just doing so well and the revenues keep pouring in. But look where the US is, and this is projection through to 2023. In fact, the US is not in austerity. It's going to have a fiscal stimulus. It's the opposite of austerity as defined by economists. Why? Because the far-sighted and intelligent US President Donald Trump has drastically reduced revenues on taxation for the big companies and the rich, so tax revenues have come down. He's also reducing government spending, but the difference between the revenues and the spending is going to widen, lower revenues compared to lower government spending, so a massive fiscal stimulus. So the question we could ask ourselves today, we'll come back to this, is whether this sort of fiscal stimulus, which is the opposite of austerity, is actually going to solve the problem for American capitalism at least. Because the argument presented to us is that the cause of crises, by some, is austerity, cutting government spending, raising taxes too much, in other words, having budget surpluses, and trying to keep government debt down. And this causes a lack of demand in the economy and caused the crisis of 2007-8. Or, after the crisis, continually applying austerity actually stops the capitalist economies from coming out of this slump. Well, clearly, if we take the US real GDP growth, we can see that, I got figures down here, we can see that the black line tells you that the average, that's the average growth going back to 2002, that we've really not improved the growth rate at all after the Great Recession, and you can see how much it dropped in the Great Recession. Between 1948 and 1917, the US economy grew at just over 3%. Just before the Great Recession, it was growing at 2.7%. Since then, it's been growing at 2.2%. It's slowing down, and has austerity caused this? And will the fiscal stimulus, which the President and his administration is now proposing, alter that process in the future? Well, we can answer the first question very quickly. Did cuts in government spending or high budget surpluses cause the Great Recession? Well, here's the figure for all the advanced economies. There's going to be a lot more graphs. Government spending is the block green line, and you can see that on the right, government spending in real terms rose dramatically before the Great Recession, which is 2008-9. As a percentage of GDP after the Great Recession, it rose even more because unemployment benefits had to be paid, tax revenues collapsed, welfare spending rose, so actually spending rose. But even before, there was no austerity before the Great Recession in the advanced economies. So austerity wasn't the cause of the Great Recession. That's the advanced economies. Here's what you're supposed to be, an emerging economy, and the others. And the same story, it's exactly the same story, rising spending before the GFC, that's economists' term for global financial crash, by the way, in the stock market. In the stock market economist world, we don't talk about a Great Recession, we talk about a financial crash. The fact that people lost their jobs and unemployment rose and incomes fell, that's not important. What happened to the financial sector that's important. So spending kept on rising. So austerity could not have been a cause of the Great Recession or the global financial crash. So before I just want to, perhaps I'll go back once, I just want to ask yourselves, what was the explanation for the Great Recession provided by the different sectors or wings of mainstream economics to start with? Well, in my book, The Long Depression, I start off with this section by saying that the famous story of when the Queen of England went to London School of Economics right in the depth of the slump of 2008. And she got out of her limousine, and there were all the leading economists of the London School of Economics waiting for her to appear. And she walked in, she's only about this high, and she turned to them and said, "Well, why didn't you see it coming?" And they said, "What, madam? Why didn't you see it coming? The recession, why didn't you see it coming? You're the economists." And they said, "Oh, well, a cup of tea." A week later, they then made an official statement saying they didn't see it coming because they didn't see it coming. This is the work of mainstream economics for you. Now, let's be more serious. Well, not much. I will now quote to you what Eugene Fama, that's F-A-M-A, who is a Nobel Prize winner in economics. By the way, there is no Nobel Prize in economics. It's the Riksbank Prize in economics. But he's one of the winners for the efficient markets hypothesis, which I'm sure many of you have studied in detail, which basically argues that markets are efficient because they are efficient. Now, Eugene Fama was asked, what was the cause of the Great Recession? I have to quote this to you, it's really good. "We don't know what causes recessions. I'm not a macroeconomist, so I can't feel very bad about that. We've never known. Debates go on to this day about what caused the Great Depression in the 1930s. I don't know. Economics is not very good at explaining swings in activity. If I could have predicted the crisis, I would have, but I didn't. I'd love to know what causes business cycles." And that's what happened after he said that.
Eu acredito que alguém tenha encostado nos interruptores do auditório. Pode, Lucas, pedir ao pessoal lá da recepção que vem aqui. Isso quer dizer corte de gastos. É isso que causa.
We carry on, shall we? I'll just come over here, it's all right.
Can we? Bom, falta luz no prédio todo. Eu não sei por que as tomadas estão funcionando.
Carry on. You're working.
Alguma coisa desarmou, juntou. Com certeza o pessoal, a equipe do prédio está resolvendo. Se Michael não se importar.
Shall I carry on?
Let's go.
Yeah. So that I think the blackout has made us take it a little bit more seriously, and I'd like now to discuss the theory of austerity and the cause of the recession and austerity. And the two key theories that I'm presenting to you are first the theory of Keynes, or Keynesians that follow him, and the theory of Marx, and Marxists and Marxians that follow him. The Keynesian explanation is that crises are the result of a collapse in effective demand, particularly consumer demand. Effective demand collapses because the cost of borrowing, that's interest rates, rise to the point where consumers can't afford servicing their debt, mortgages, and capitalists can't make sufficient profit. Now, I'm okay, I can manage. The Marxist explanation is that crises occur on a regular basis under capitalism because capitalist investment collapses when profitability and profits fall. Falling profitability, which is the rate of profit, eventually leads to a fall in the mass of profit in the weakest parts of the capitalist sector. That has a ricochet effect, and it generates a collapse in investment and employment. So there are two causal sequences here. So let us consider the first argument of Keynes, or the Keynesians, that it's effective demand, particularly consumer demand, that matters. And if we look at this graph, we can see these are what happened between 2007 and 2010 in all the major economies in the period of the recession. And we can see the blue dot tells you how much investment dropped, business investment dropped. And the red lines, blocks, tell you how much consumption dropped in each of those countries, from the EU right across to the US, UK, and Japan. And you can see, if you look at the US, UK, and Japan, business investment dropped nearly 20% in the period 2007-10 in every country, but consumption hardly dropped at all, and in the case of Japan, actually rose. In the case of the US, it didn't fall at all. So the lack of consumer spending was not the cause of the Great Recession. Much more likely was the lack of business investment. So that starts to throw us in the position where investment is the issue, is the key driver, and that brings light to the whole situation. And you can see in the next graph, when I'm looking at the drop, the deviation between what the IMF, this is the deviation between what the IMF thought would be investment in spring 2007 and what actually happened. And you can see that investment fell dramatically from the forecasts of the IMF in 2007. There are 2 points here. First of all, the IMF was useless and got all the forecasts wrong. And secondly, you can see again the very sharp fall in investment in all the major economies. And in particular, the blue block is business investment, what I would call capitalist investment, because the other bit, residential, is people buying houses. And then there's the government investment. But business investment, which is always the biggest sector, also fell the most. So this brings me to a bit of macroeconomic identities. Are you ready? Here's Keynes's macro identity. National income equals national spending. Okay? So if you add up all the income everybody earns and adds up all the expenditure made in an economy, they equal according to the identity. National income can be broken down into profit and wages. National expenditure can be broken down into investment and consumption. So you either invest it or you spend it. So profit plus wages equals investment plus consumption. Now, if we assume that all wages are spent on consumption and not saved, and I'm sure looking around the room I can see that you don't save anything, you spend it all, then profits equal investment. That's the macro identity. Now, the issue before us is whether it is investment that drives profit or whether profit drives investment. And the Marxist view is that profit drives investment because we have a capitalist system which is production for profit. That's the fundamental driver of the capitalist system. The capitalist system is not here to invest, to make things, produce things and services that we all need. It is not a socialist system where we produce for need. It's a capitalist system where you produce for profit. Money makes money. How you make more money can be through speculation, by taking money off other people, basically, or by exploiting the labor force, which you've discussed in previous occasions. But money makes money, and that's the aim. So profits is the driving factor for investment, not investment the driving factor for profits. That's the theory. And the profit cycle will go something like this. You've got high profits up the top, the rate of profit starts to fall, eventually the mass of profit falls, there's a collapse in investment, employment, consumption, and we have a crisis. People cannot buy the things that they need. Capitalists find that they cannot make enough profit to continue investment and employ people. There is a lack of effective demand. So the Keynesians are right. A crisis is a lack of effective demand, but that's merely an identity. It is not explaining the cause of that crisis, which is a question of what's happening to profits. Eventually, profits come down sufficiently that loads of companies are put out of business or taken over. Employment is reduced so that there's a big reserve army of labor. Old factories and offices and other things are removed from the system. There's a cleansing, and we get an increase in the profit of what's left. Profitability rises, the cycle takes off, investment picks up, and the cycle begins again. Also use Marx's phrase, the whole crap starts again. So does profitability fall? Are the Marxists right that profit matters? And does profitability continually have a tendency to fall, which is one of Marx's key laws in the explanation of capitalist production and the cause of crisis? Is there evidence that this is correct? Well, here is the figures of Esteban Maito from Argentina. I think that's right, Maito, maybe. Poor Esteban, I think, is working in the dungeons of the Treasury Department of Argentina. And in his spare time, he produces analyses of various things on the world economy. You should look up his site. And one of them is the world rate of profit, which he developed for 14 countries from 1869. Or to be fairer, this is a Michael Roberts damn lies and statistics version of Maito's work. I've doctored it a bit, but I won't explain why, in case you ask. But you can see that over the whole period of these 14 countries, the rate of profit has come down from 40% down to under 20% over a period of, how many years is that? About 140 years. Since Marx wrote Capital, the rate of profit's fallen, not in a straight line. And that's very important because there are factors which counter it, and there are periods when there is quite a sharp rise in the rate of profit, particularly in wars. But you can see the neoliberal recovery, where we spend a lot of time discussing about neoliberalism. It's, you know, it's what has neoliberalism done for the rate of profit is what I would say to if I was a capitalist. And the answer is, well, it saved it from going off the end of the scale here, and it's gone up a bit. And so this 40 years of hell that we've had to put up with has achieved that for capitalism. That's a a great step forward for the future of the capitalist economy on a world scale. Getting back to the argument that investment follows profitability, so if we go through this cycle, we would expect to see falls in, I think I'll skip this one, it's too complicated. Yeah. Let's go on to the next one. Here is a mainstream analysis of the rate of profit against investment in the US. CAPEX, or capital investment, is the blue line, and the red line from 1952 is the rate of profit by a mainstream economist. Not a Marxist one. It's not exactly the right Marxist categories, but what do we see? We see a fall in the rate of profit and generally a fall in the investment rate on an annual basis. So there appears to be a correlation. And here is a Michael Roberts statistical graph, which shows the mass of profits in the US, which is the red line, and the business investment annually in the blue line. And I've advanced the profit rate by 1 year. And what you get is that when the profit rate falls, 1 year later, the investment rate falls approximately, not exactly. And when the profits, not profit rate, rises, then eventually business investment rises again. I've only taken up to 2015. You can read the exciting Express latest news on this data on my blog. But you can see there's at least an eye characterization between investment and corporate profits. So let's go back to Keynes and Kaleski. Actually, Keynes didn't invent the macro identity. It was done by his research colleague called Richard Kuhn, and Kaleski also took it up. And Kaleski made this point. He said, if we can take investment on one side, and if we take off non-capitalist savings, that produces profits. So what are non-capitalist savings? Well, they're our savings. So that if we save anything, we tend to reduce the amount of profits because we're saving. And the other non-capitalist savings is government savings. So the government increases austerity, if you like, and saves more, it will reduce profits. So the best thing, says Kaleski, that capitalism can do is get the government to spend more, and then it will increase profits. So profits are the result of government spending, says Kaleski, or Keynes, if you want to use the identity. Marxist logic is that it's the other way round. If we take profits and government savings and add them together, we get investment. Now, what happens if profits stop rising, which is the Marxist argument we just discussed? Then what would be the best thing for capitalism? To increase government spending, reduce non-capitalist savings? No, the opposite. The best thing for capitalism in that situation is to raise government savings, to actually introduce more austerity, try and squeeze some more money out in order to keep investment going if profits have gone down. Now, of course, capitalists don't do that. If profits go down, business investment goes down, governments don't raise money in order to invest more. They actually use it for other purposes, and the result is that we don't get the result of a maintenance of investment that it's hoped for in that bottom identity. Now, the argument in the period after the Great Recession by the Keynesians was that the reason we have had a long depression where there has been no growth compared to where it was before the crisis, and we've had in many countries a depression, the common mainstream term is a secular stagnation. The reason we've had this is because through the stupidity of capitalism, they haven't recognized the need to expand government spending to get demand going and therefore create the conditions for recovery through extra investment and spending. So the problem is that governments have tightened fiscal spending. They have increased austerity. That's again, what do I mean by that? Well, I notice there are two messes you've got tomorrow, 21 and 22, I think, or 22 and 23 on public finances. It'd be worth having a look at what the papers are there, because as far as I can understand through my brilliant Portuguese, that there's a difference of opinion about the question of whether it's right to cut public debt, or that caused the crisis, or others would say, actually, it doesn't matter about public debt. Governments can spend as much as they like, and they could have solved it. Either way, government spending would have solved the crisis if it had been carried out, but through the stupidity and irrationality of the capitalists and their neoclassical advisors, they didn't do this. Now, this is Paul Krugman's graph to show this. He wants to show that as fiscal tightening takes place, that is, on the bottom line here, the deviation from what the IMF said should be the growth, yes, I know, it's the IMF's forecast again, you will get a fall in the growth. So let's take, who's in the bottom right-hand corner there? Can you see that? GR, what's that? That's Greece. So if you fiscally tighten, like Greece did, you'll have a massive reduction in your GDP growth. Now, is it true that Greece's crisis was due to the fact that they fiscally tightened, or that they had a crisis and then they were told to fiscally tighten? It's the question that's what we're debating, really. If you take Greece out of the figure there, because it's such an outlier, it doesn't look quite so significant. So Krugman then said, well, actually, I suppose it's not very clever using the deviation from what the IMF thinks. Why don't we actually look at what is called the multiplier? I'm sure you economists know what the multiplier is, but the Keynesian multiplier is that if for every unit of government spending or reduction in the budget surplus or an increase in the budget deficit, depending on how you want to define it, how much do you get as an increase in real GDP as a percentage? What is the multiplier, the ratio between those two things? Krugman said, here's the change in real GDP on the up axis here between 2010 and 2015 for all these countries. Michael Roberts has doctored this for Krugman to make it clearer. And then along the bottom is the change in what he calls the cyclically adjusted primary balance. I hope you all understand what that is. But the gist of it is that if we look at the budget and just look at the surplus, excluding interest costs, and then we take out the ups and downs of that surplus according to the cycle, so we can look at the structural line in between. So that's two things which disappear from reality, but there you go. The cyclically adjusted primary balance, how is that? If that goes more austerity, which is going out that way, that should mean lower real GDP if the Keynesian multiplier is applying. Because we're turning it round. We're not saying there's an increase in spending gives you an increase in GDP. We're saying a reduction in spending or the budget gives you a lower GDP. So the multiplier still applying, except in the austerity verse. So the simple thing is more austerity along the bottom there should lead to lower growth. Well, there seems to be some support for that argument between the period 2010 and 2015. But I've taken all the countries, the rotten countries in Europe, and the better countries in Europe, the G7 basically, and a few rotten countries in Europe who did badly in that period. And all the countries, yes, the negative correlation here means that a rise in austerity has led to a fall in GDP. 0.34 is the correlation. However, all of that is really actually in GIPS, which is Greece, Ireland, Portugal, and Spain. If I just look at the top 6 capitalist economies in the world, actually, they had more austerity, but they had more growth. They had the opposite result. The multiplier didn't work, according to the Keynesians. Now, think about that. Why is that? What's happened? Why is it not applying? I think, do you know what statistics says? It tells you there must be another factor. There must be another factor involved, which is not government spending. So this correlation, if you like, is spurious or fails to recognize another factor. I can think of or the other way round is that there was more growth, therefore it was possible to have a high budget surplus and have no effect. But either way, there's something else going on. That's the Krugman one. So I thought I'd have a look at the Keynesian multiplier a little closer. This is another Michael Roberts concoction. So along it's the change in net government borrowing, which is basically the budget balance. So net government borrowing means it's a deficit. And so if there's no borrowing, there's no deficit. And the change in real GDP. So the change in real GDP is along the bottom line, going along that way, and the net government borrowing that way. So the more austerity means that there's a change in net government borrowing. So more austerity, you're going down that way, what will happen with the real GDP? Well, the answer is that for the whole of it, that more austerity leads actually to an increase in real GDP for everybody on this. And if you, even for the rotten countries of Europe it was, and for the top 6, there's a very strong correlation between cutting your budget deficit and more growth. Again, something seems to be wrong with the Keynesian multiplier. Now, back in the 2008 period, there was an issue that the Keynesians said, spend more money. Look what's happened in China. China has dramatically increased infrastructure spending, and they avoided a crash. And you can see that the level of fixed investment on infrastructure, which is done by the state in China, is way, way higher than it was on the private sector in China. So there's a massive boost to investment. Do you remember the previous identity? I said that if the money that was used to increase government spending was used for investment, it might lead to an increase in growth. That was the Keynesian argument. So you could say that China adopted the extreme Keynesian position. The only difference I would say is it didn't do it by cutting taxes or by increasing government spending. It did it by telling everybody out there, you invest or expect not to be seeing tomorrow. And at the same time, the state sector also was ordered to build roads, build whole cities, and to completely transform the communications of China in that period, using their funds, available household savings funds, to do that. I was told only this week by some of my hedge fund friends that they've been to China recently, and they've gone into Guangzhou and found that virtually the whole of the public transport system now is electric. So, there's just been a new law introduced by the government which says that every car has got to be electric within the next couple of years. And we're not talking about little ones, but big ones. And that if you go across the border into semi-capitalist Hong Kong, there everything's on diesel and there's pollution and fumes everywhere. So the transformation that's taking place through the state intervention in China has been dramatic. We can argue about whether that's Keynesian. Perhaps I shouldn't do, I think we'll skip that one, because it's my colleague Carcadi's graph and we don't want to talk about his. So here is an alternative view about what was going on the question of austerity, the Marxist multiplier. What do I mean by that? I mean, what's the change in profitability, which is the change in net return on capital, going that way? Does it lead, so if the net return on capital rises, profitability rises, will it lead to a rise in real GDP? This is over exactly the same period as the Keynesian one. And what do we find? We find that wherever there was an increase in the net return on capital, here would be naught. 0 would mean there's been no increase in the net return on capital from 2010 to 2015. All those countries to the right of it have had an increase in profitability between 2010, I think it was in 2017 actually. So you can see big increases in profitability for Ireland, small increases for Germany, virtually no increase for the Eurozone. Greece's profitability Still hasn't got back to where it was in 2010. It's actually lower. Italy's is lower. So the higher the rate of profit, it's going to the right way. Does the growth rise with it? Yes, it does. On the whole, the trend line is showing exactly that. So if we take all of them, there's a positive correlation between the rate of profit and an increase in growth of 0.48. And even in the rotten European countries that were deeply in crisis, the correlation's even higher, so that if they would improve their profitability quickly, they got faster growth, as Ireland did. And for a G6, it's 0.72. So there's a very high positive correlation between the changes in the rate of profit and changes in growth, in this case, in a positive direction. So the Marxist multiplier, I'm pleased to tell you, is exceedingly more convincing than the Keynesian one. And here is my attempt to compare the Keynesian and Marxist multipliers in the US over these previous decades. The average real GDP as a ratio to the average change in real government spending and as a change in the net return on capital. So if there's a change in the rate of profit, ROP, how much does growth change on average between 1971 and 80? That's the blue block. So it changes, the multiplier is 1.4. So for every change in the rate of profit, there's 1.4 change in the growth rate. It's a positive correlation. What happens with government spending? If you increase government spending in the US, you get a 0.3 of an increase in real GDP growth in that decade. And you can see across the board that basically the Marxist multiplier tells you is a much more powerful factor in driving growth, namely change in the rate of profit in a capitalist economy. A change in the rate of profit increases growth, much more likely than a change in government spending increases growth. That was pretty simple, really, isn't it? But you'd be surprised how often we have to prove this, or try to prove it. Of course, it's not the mainstream view. If I was sitting in a mainstream meeting like this, of course, I wouldn't have the opportunity to present this, but if I did, then I would hear people telling me that what we need to do is get more government spending, stop austerity, and we can transform the capitalist economy. It's just a question of the stupidity of the capitalists and their advisors. And once we sort that out, it'll be fine. Well, I'm saying that history has shown, evidence shows that even if you do that, well, I'm not saying you shouldn't, because more government spending will be beneficial to labour, but it's not necessarily beneficial to capital. And that's the point. And therefore, if capital loses profitability as a result of extra government spending, then it will not do it. And that's a rational reason for austerity in the minds of capitalists. And you can see the correlation here on government expenditure in the US over all these decades is actually negative. So if you did increase government spending, if that's an accurate figure, you actually got less growth than if you didn't. While the rate of profit change is a positive of 0.64, which is quite a high correlation. Of course, these are just correlations, and all you know out there about statistics is that they're just comparing two things. They don't give you a causal connection. But I'm coming to that. Next, please. I'm going to deal with Brazil as well. I took a period of 1954 to 2010 in your excellent Brazilian statistics, and found that the correlation between changes in government spending to GDP and real GDP between 1954 and 2010 for Brazil is negative. So on the whole, there was no multiplier effect by increasing government spending on Brazilian real GDP growth. I think that tells me that there are other factors involved in Brazil's real GDP growth than what happens with government spending. Government spending is clearly not much of a causal effect on growth. I did a Marxist multiplier on Brazil for the same period, and what do I find? Well, not much of a correlation either, but at least it's slightly positive, but not much of a correlation. So I conclude from that I don't really know what's going on in Brazil, and you're here to help me. But what I can conclude is that we have shown that austerity is not the decisive factor for the long depression and the slow growth that we've seen in the recent period. And secondly, that what drives a capitalist economy is investment, but what drives investment is profits. And I'd just like to give you, if I can just find it now, a couple of studies on this which have been presented by various different people. In particular, the Federal Reserve Bank of Cleveland. Now, they're economists who, one of them probably earns about what 50 of you earn. And he, of course, it won't be a she, found a very high correlation between the movement of business profits, investment, and industrial production. The chief economist there said, a simple correlation analysis shows that the correlation between the change in corporate profits and the change in industrial production is 54%. But the correlation goes up to 66% if I just change the timing a little. Similarly, the correlation between corporate profits change and a change in domestic private investment is 57%. It goes up to 2/3 if I slightly change the timing, as I did on one of my graphs. Then he goes on to use the Granger causality test. Now, I'm sure you're all aware of what that is, so I won't need to explain it, will I? Well, I will, just in case you don't. Granger causality is to say that if we look at the correlations and do a regression analysis, if we find that the probability that there is no causal effect is near zero, then we can probably assume that it's highly likely that it is a causal effect. Have you got that? So it's the opposite of saying we look for a null hypothesis, and if the null hypothesis is significantly low, that means it's probable there is a causal effect. It's the only way we can really statistically have a reasonable guess at what direction something is if we have a correlation. And the Cleveland Bank found that a quarterly change in profits changes production by 1/4, and it doesn't work the other way around. Production doesn't cause profits to go up. A similar relation applies to investment. So this is their conclusion. Firms seem to adjust their production and investment after seeing a drop in their profits. So the Federal Reserve Bank of Cleveland has reached a Marxist conclusion. Jose Tapia Granados looked at 251 quarters of US economic activity from 1947, and he found that, most important, corporate profits stop growing, stagnate, then start falling a few quarters before a recession. Profits lead investment. He found that pre-tax profits can explain nearly 50% of any movement in investment, but investment can explain hardly any movement in profits. So there's a clear reference to that identity that I mentioned before between investment and profits. Which way does it go? So we have a view that is presented to us in the labour movement. I don't know what the situation is in Brazil, but in the UK and in Europe and probably in America, in the labour movement, if I go to a labour movement meeting called by the trade unions to discuss economic policy, which does happen, particularly in England at the moment, because we have a left-wing labour leader and a left-wing economics spokesman who considers himself a Marxist, I can have a room like this, and this Marxist labour leader will have a long line of economic advisors on the platform, similar to your SEP meeting earlier, and each one of them will be a leading Keynesian economist. And each one of them will say to the audience, what we need to do is reverse austerity, what we need to do is raise government spending, and then we can transform the economy. Now, those Marxist economists sitting in that room do not really get an opportunity to say anything at all about whether that plan will really work, or whether President Trump's plan for fiscal spending by cutting taxes and giving the corporations a load of money to invest, which they're not investing but speculating with, will actually produce a transformation of the economy and end the long depression. What this theory shows, my view, is that the Marxist theory of accumulation is that profits drive investment. Investment does not drive profits. The evidence I presented to you in various ways, with the usual health and safety warning that I mentioned before, suggests that profits lead investment. Profits call the tune, if you like, not investment creating profits, as the Keynesians argue, and that therefore a program of government spending, certainly at the levels which most Keynesians talk about, which isn't China's 16% of GDP infrastructure investment, but is 1 or 2%, is not going to transform the capitalist economy. Now, nobody is against an increase in government spending to help welfare, to help unemployment benefit, to invest, more importantly, to get jobs back. But the reality is that in a capitalist economy, where capitalist investment is 16 to 20% of GDP, and public sector investment is 2 to 4%, you can see the level of multiplier that's required if you're going to transform that position. Even a 4% of GDP that is public investment, which is actually much lower in the US and the UK, you increase government investment or spending, and purely on investment, by 25%, that takes your 4% of GDP up to 5% of GDP. What is happening to the 16% or 20% of GDP that is being invested by businesses? If that's going down because profits are calling the tune, then even the small increase in government investment will have no real significant and decisive effect on transforming the economy. That is not to say you wouldn't be in favour of it. It's just like any other reform. It's a good reform if we can get more government investment on things that people need on investment and so on. But it's not going to solve the underlying problem, and that what will happen is actually that some of that in government investment could actually have an effect on the business investment profitability and drive it down and make the situation worse for capitalism. So capitalism has a rational reason for austerity. Austerity hasn't been invented because it's just an ideology, although it is that too. It's an ideology of neoliberalism, but it's been invented because it has a rational kernel to it from the point of view of capital. And therefore, it has been imposed because they're trying to restore the profitability of the private sector and not to reduce the profitability of the private sector by, as they see it, wasting money in the government sector. So they're in favour of reducing the costs of the government sector to the minimum in order to try and stimulate the level of investment and profit in the business sector. That policy, the neoclassical austerity policy, has clearly failed. But the alternative offered to us within the labour movement and in the spectrum of economics of the Keynesian alternative of just increasing public spending or reducing taxes or even increasing government investment without changing the structure of the economy at all, so that capitalist investment is still the dominant feature through the big companies of each of the economies and internationally. If that's not changed at all, then the problem of ending this long repression won't come to an end, and the whole crap will go on again. I would say that the only solution, what is the solution for capitalism then, if that's the case? The solution is another significant slump which wipes out all the old deadwood of capital, gets rid of all the unproductive workers and puts them on the scrap heap, and introduces a much leaner and fitter capitalism, which has a higher profitability, which can begin, therefore, to expand again after a significant cleansing. That cleansing has not taken place clearly, sufficiently, despite the Great Recession of 2008-9. What has happened since is that central banks and governments have done it all in their power to save all the banks that should be allowed to go to the wall, to save big companies like the automobile companies in America, or General Motors and Ford, who were bailed out with billions of taxpayers' money to keep them going. So they have kept a life support machine on all these, what is commonly called zombie companies that exist in the major economies, rather than doing an old-fashioned capitalist neoliberal solution of cleansing them all out and putting another few 100 million people on the dole. These are the alternatives. The political one is bad news for capitalism, and they didn't want to operate it, go for it, and financially it was bad news, so they've operated of trying to maintain the system. But that has meant that profitability has not recovered, debt has risen, and therefore the only solution for capitalism is to go through yet another slump. I finish on this, Chair, that I predicted in my book, The Long Depression, written in 2016, that there would be a new recession in 2018. Oh. There hasn't. Where are we? We're in June, halfway through. I don't think it's going to happen in the next 6 months. So clearly, forecasts are dangerous things to do, but I've never been frightened to make one, contrary to most economists who don't make any forecasts except afterwards. And so I'm reanalyzed that position, and I think it's due to a cyclical effect that's going, and also a considerable attempt to sustain most of the capitalist economies. But that's beginning to run out. We shall see. But I do not suspect that when I'm invited back again, I shall make that by 2020 we'll have this slump. If I come back in if you invite me back in 2020 and there's a boom on, and Trump has succeeded with his fiscal stimulus, I won't be available.
Good evening, Mr. Roberts. Welcome to Brazil. My question is about your graphic of the world rate of profit. There's something caught my attention, was how you split the 20th century. I studied the long 20th century in my monograph when I read Giovanni Arrighi's concept of the CSAs. So that caught my attention when you raised about the division of great rise after the 50th century. Sorry. Should I write down? Tá bom, tá. Yeah, that one. This sort of division that caught my attention because it reminded me when I read about the fourth cycle of the system accumulation. My question about this is very concise about what's your opinion about the ideas of the cycle of system accumulation according to this division made, long depression, recovery, Great Depression, Gold Age, etc. And do you think that as the capitalism goes by, will we be a fifth cycle where the hegemon could be China? And about all you said, is there this possibility? And if there is, how the capitalism is going to recover as China used to be a socialist republic back in the day? Again, thank you very much and welcome.
Vou fazer blocos de 3 perguntas, por favor. Tem uma lá atrás do Javier. Por favor, que o microfone chegue lá. Ou o Javier chegue aqui. Também pode ser.
Bom, boa noite. Primeiro, parabenizar o Michael. 2 perguntas curtas, né? Você nos provocou, então 2 provocações. Você falou, há uma racionalidade na austeridade. Sim, há uma racionalidade. Agora, Hayek, em 43, defendia também que havia uma racionalidade na austeridade. Ele dizia que uma racionalidade política, né? Que a classe capitalista não queria depender do Estado para o pleno emprego acontecer. E mais ainda, a classe capitalista não interessa o pleno emprego, porque dá mais poder de barganha para os trabalhadores. Então, haveria uma questão política. Então, a segunda questão tem a ver com isso também, né? O Keynes também falava que, após uma queda, o investimento e o lucro voltaria. mas ele estava preocupado, em termos sociais e políticos, né, com as ameaças ao capitalismo. Por isso que ele não queria, entre outras razões, ele coloca que ele não gostaria, né, que a volta fosse depois de uma queda cíclica, como o capitalismo funciona. Então, minha pergunta é, você acha que hoje em dia a classe capitalista não está preocupada com ameaças, como estava em 36, e por isso a solução seria uma nova queda? Né? Essas duas provocações só. E, mais uma vez, obrigado.
A terceira pergunta, tinha uma lá atrás, do Gilead. O Gilead da grande facilita também, né? Olha o tamanho do cara. Aí eu vi logo.
Boa noite. Antes de mais nada, parabéns pela exposição. Duas perguntas rápidas. A primeira é sobre a metodologia do cálculo da taxa de lucro. A gente sabe que existe um grande debate hoje dentro das formulações. É só saber o que é que você incorporou no numerador e no denominador. Se seguiu a mesma formulação do Maito, não é? No caso, o numerador é estoque de capital, ou se já incorporou as contribuições do Freeman como ativos financeiros também, né? Se ativos financeiros também entra nesse cálculo. E a segunda é um pouco também sobre a relação entre lucro e investimento. Nos esquemas de acumulação ampliada, Marx coloca aqui, uma parte do lucro tanto vai para consumo produtivo e uma outra parte vai para consumo não produtivo. Então, não necessariamente todo o lucro se transforma em consumo produtivo. Como é que você pensa isso nessa parte mais metodológica? Obrigado.
A gente vai partir para as respostas desse primeiro bloco, e foram ótimas as perguntas, seguiram aquela orientação de serem curtas, e eu só queria fazer uma advertência, por um acaso todos cumpriram esse requisito. Lembrem-se que há um tradutor simultâneo, portanto, tentem falar espaçado ao fazerem a pergunta para que haja tempo de traduzir adequadamente. Michael?
Here. These are very good questions. Yeah. And these are very good questions, and every one of them is answered in my book, The Long Depression. It's a bit like Marx's Capital. If you read carefully the lines, you will find the answers. And I have dealt with the first question of the cycles that we see here. And there's a chapter called Cycles in Capitalism, which I deal with the arguments about that I consider there are cycles in capitalism, and that the conjunction of these cycles coming together is what causes a depression, which is why I call the book The Long Depression. And there's only been 3 depressions in the history of capitalism so far. That's the period from 1871 to about the early 1890s. It was then called the Great Depression, now called the Depression of the late 19th century. Then we have the Great Depression of 1929 to the middle of the Second World War. And in my view, we've had a new depression which began in 2007-8 and has continued up to now for the last 10 years. And I argue that in the Cycles in Capitalism chapter, that you can bring various cycles together, in particular the cycle of profit as shown on this graph, when these periods go up and down. When it's down, and you also got a falling in the prices of production, deflation, a number of other cycles come together, the housing cycle collapses, then you can get a depression. Depressions don't come very often. In the book, I also describe the difference between a depression and a recession. In fact, that's what the book's about. So before going to a very long explanation, I'm sure you've all got the English version of my book, or the Spanish version of my book, or Amazon's version of the book. Sorry, that was an evil word mentioned then. But I urge you at least to have a look at that, and probably if you go on my blog and work through enough posts, if you've got enough energy and you don't get too bored, you will find most of the answers to many of the questions that the first questioner made. The second question, again, answered excellent question, really, that Kaleski in 1943 wrote a very interesting essay in which he argued that it wasn't capitalism wanted higher unemployment, not because it was the inevitable process of the reserve army of labour to create the conditions for higher profitability, which Marxists would argue, although Kleski considered himself a Marxist, at least on Saturdays. But he considered that the reason for the reduction in employment was because the capitalists did not want a strong labour movement, and they wanted to keep the workers in fear with unemployment, which I think has a considerable grain of truth. But I also think that in some ways, capitalists do not control the economy, and they're not in a position to decide what the level of unemployment is. It comes through the process of individual capitalist firms' decisions about whether they're making profits or not, and whether it's worth investing, and whether they're going to close down this company or not. And those decisions, behind the backs of each individual capitalist, there's a law of value going on which drives profitability down, and that creates the conditions for the reserve army of labour. Kleski wrote this in 1943 when full employment was in a war economy. I think if he was alive now, he might want to reconsider whether he thinks that's the reason for austerity and for the drive down in unemployment. But there are lots of kernels of truth. I recommend you read that essay to see what Kleski has to say. The next question is, how do we measure the rate of profit? Could I go into detail about my denominators, my numerators, and whether I agree with Alan Freeman that you should include financial assets in the denominator, and whether, as all profit isn't reinvested in productive assets but goes into either unproductive labour or into being consumed by the capitalists, could I explain how that works out in the rate of profit? In the Long Depression book, I have an appendix on how I measure the rate of profit and how other people do. I urge you to have a look at that. I have a rather classical position of actually including labour on my denominator and fixed capital and inventories on my denominator. I'm working with somebody else that's also going to include the impact of turnover on fixed capital to try and get the rate of profit more accurately. I don't think it's correct to include financial assets on the denominator because financial assets are fictitious capital, really. Alan Freeman thinks it provides, those of you who know who Alan Freeman is, he's one of the best Marxist economists around, and I agree with 90% of what he says, maybe more, but on this occasion I don't agree with him that it's right to include financial assets in the denominator, particularly as what he's referring to actually are financial liabilities. And anybody who's done bookkeeping knows you also have assets on the other side, and they cancel each other out. So it's a bit of double counting if you start to include the liabilities of added into in an overall economy into your denominator. Now, I'm sure that's all clear to you, exactly what I've been talking about, and all those questions are answered. But if they're not, then have a look at what I'd say in my appendix of my book. And once again, if you have plenty of time overnight in your pajamas to go through my blog, you will be able to find all these issues have been debated on my blog in some post or other. I don't know where they are because I've forgotten.
Vamos lá, a gente tem tempo de mais bloco de perguntas. Tem um colega aqui que tinha já camisa preta, já pedia da primeira. E tem uma segunda ali.
Boa noite, professor. Meu nome é Jadson. Eu tenho um acordo...
Um instantinho, já está.
Boa noite, professor. Meu nome é Jadson. Eu sou mestre em Economia pela PUC São Paulo. Eu tenho um acordo com a crítica que o senhor faz ao pensamento keynesiano quanto ao investimento e ao lucro. E tenho um acordo até com a solução que o senhor aponta. Só que eu acho que essa solução ela é muito mais, digamos assim, uma solução liberal ou neoclássica, que é o que costumeiramente vem acontecendo, do que uma solução de fato. O que eu quero dizer com isso? É que a cada crise do capitalismo, o que ocorre é exatamente isso. Você é destruído, o próprio sistema destrói os capitais menores e os capitais, digamos assim, pouco competitivos, para que se chegue a uma concentração e se possa ter um poder de acumulação maior posteriormente. Só que hoje, isso não é tão simples de acontecer, porque a crise não está mais afetando só o pequeno e o médio capital. Ela está afetando o grande capital. Em 2008, a Chevrolet quebrou, né? A GM quebrou, tantos bancos quebraram, governos quebraram. Então, você deixar a crise acontecer de acordo ipsilinha com o pensamento liberal é muito perigoso para a própria burguesia. No entanto, pelos próprios argumentos que o senhor colocou, e eu tenho um acordo com todos eles, fazer a política econômica keynesiana, ela também gera problemas talvez maiores do que você fazer os da política econômica neoclássica. Então, o que eu vejo para a burguesia hoje é que ela realmente está num beco sem saída, bem de acordo com o título do evento, porque tanto uma política econômica como a outra política econômica, seja keynesiana, seja liberal, ela leva para o colapso da burguesia e para o colapso da humanidade. Aí, nesse sentido, a pergunta que eu faço para o senhor é que, será que a saída realmente, de fato, não está na luta de classes e na tomada do poder pelos trabalhadores? E aí eu falo nesse sentido não é porque é bonito falar em trabalhadores e luta de classes. Eu falo nesse sentido porque, assim, o mercado ele tem as suas contradições. E essa é uma contradição que ele sempre engendra desde que ele existiu. A gente sempre chega no final de um ciclo, assim, digamos, e chega nessa crise. Então, será que para sair da crise, acabar com o desemprego, acabar com todo esse problema, será que não seria um momento realmente de planejar a economia, mas não planejar no sentido soviético ou stalinista, mas planejar no sentido, vamos acabar com o mercado e ver, tipo, de modo mais planejado, quais as necessidades da humanidade e como a gente pode atendê-las? É nesse sentido, mas obrigado aí pela palestra e por todo o aprendizado.
Mais uma pergunta, por favor.
I'm pretty happy to be there with these people. I'm from São Paulo State. I'm pretty happy and pretty sad at the same time because I'm the first student of high school in 23 years of ENEP. By the way, I want to know what do you think should be the central bank investment, because as can we see in 2008 crisis, the central bank bought so many assets, and what can it be to the new system? Thank you.
Vamos no nosso bloco de 3, agora Patrick.
Boa noite. Pergunta sobre as relações causais entre lucros e investimentos, né? Tentando só adicionar uma complexidade aí. O Marx, lá na seção sobre sistema de crédito, ele descreve, por exemplo, a possibilidade de que os próprios banqueiros, o próprio sistema financeiro, consiga, quando está descrevendo a forma de aparência das crises, a forma aparencial das crises, que o próprio sistema financeiro consiga perceber uma redução da atividade econômica, por exemplo, quando aumenta a necessidade de dinheiro dos capitalistas para financiar suas atividades, que é, inclusive, esse tipo de... O sistema financeiro consegue perceber isso por ter, enfim, por estar atuando no mercado e estar financiando isso, e que, inclusive, pode anteceder o problema da lucratividade, quer dizer, pode vir antes da própria medição da lucratividade dos capitalistas. De modo que a crise aparece, nesse caso, como uma crise de falta, não de falta de capital, mas de uma crise de falta de dinheiro, mas que, na verdade, expressando uma tendência de queda da lucratividade que sequer apareceu ainda. Estou dizendo isso para questionar o seguinte. Isso não poderia acontecer, inclusive, até mesmo da relação causal que você aponta está correta, mas que ela não possa ser medida empiricamente. Porque pode acontecer, inclusive, de que a queda dos investimentos ela se dê antes de uma queda da lucratividade, mas expressando uma antecipação de um movimento de queda da lucratividade que o próprio sistema financeiro já possa estar percebendo. Estou dizendo isso porque a questão, nesse sentido, porque mesmo no caso de que, por exemplo, você mostrou ali no Brasil, que não parece ter uma correlação dos dados entre a queda da lucratividade e a queda do produto, pode ser que tenha ainda assim a relação causal seja essa, mas que de alguma forma haja um movimento de antecipação que é característico do desenvolvimento do sistema de crédito. E a segunda questão é a seguinte: em que medida o próprio aumento da financiarização, o aumento da especulação, não aumenta ainda mais essa possibilidade, potencialmente, de não haver essa relação empírica nos dados aí entre o lucro e o investimento, mas mesmo assim existir uma relação causal.
Obrigado aos colegas que novamente mantiveram as regras.
I must first of all go back to a previous question about the empirical measurement of the rate of profit. It's very important, and I was being a little jokey, but perhaps a bit too much. But it's a serious question whether we should analyze empirically the Marxist categories. There are some Marxist economists around who think that this is unnecessary, that we just need to understand the theory and the logic of the law of value and the law of accumulation and the law of profitability to draw it. And what their argument is that we know that this Marxist view is correct because we do have regular and recurring crises in capitalism. And Marx has explained how this would work in Capital and in Grundrisse and other books. And it's true, we have regular crises. So trying to measure with official statistics what the rate of profit is, whether it goes up or down against investment, is both unnecessary and wrong, because official data is not accurate, not designed to meet the Marxist categories, or even more theoretically, the law of value is hidden beneath the movement of accumulation, and therefore looking at official statistics, we're looking at market prices, money prices, we're not looking at the movement of value. Well, I don't agree with that. I think that for two reasons. One, I think Marx's economics and Marxism is scientific socialism. It's not just socialism because we know capitalism is wrong. We're trying to scientifically analyze why. And if we're scientific and we're using scientific method, then we should try and find empirical evidence to back our arguments. Marx certainly did. He tried to look at movements of slumps and to analyze when they were taking place. He even made attempts at forecasts and how often they would happen. He was usually wrong, but he didn't have much data to work on. And I think the more data and the more effort, the people standing on his shoulders can help to do that. At the end of this year, my colleague Guglielmo Carcadi, Italian Marxist economist, myself, have edited a book where we've got 15 young scholars from around the world, including Brazil, Argentina and others, Japan, everywhere, young scholars who have looked at their own countries to try and investigate and analyze what's happened to the rate of profit there. And we'll be publishing this book to show people that we can empirically investigate this. And you'd be surprised to learn that there's a great similarity between the movement and the cycle of the rate of profit in all these countries. There are some differences, but on the whole, there is a similarity, which is not surprising. If you work out a world rate, you can add them together and you can see that's the case. So I think this is powerful evidence in the interests of Marxist economic theory. So it is important how we measure it, and there are different ways of measuring it, and we don't always. There are differences, big differences between various Marxist economists who do this about how we should measure it. But on the whole, what I find absolutely encouraging is that however we measure it within reason, the same trends and tendencies appear to exist, whether it's we just measure it in the corporate sector or the non-financial corporate sector or the whole economy, or whether we add in labor, whether we take labor out, whether we put inventories in, whether we use capacity utilization, any myriad of economists from Scheich to Freenham to Kleiman to many others, and the general same tendencies and trends exist. So that makes me feel more confident about the robustness of the work we're doing. But I say there's a section of Marxist economists who think this is a total waste of time and also wrong. And that's another issue that we could discuss. So having said that, would big capital suffered in the Great Recession, not just small capital? So is this a different situation? I still meant, I think, a concentration of capital. If you take the banking sector, some big investment banks went down in 2008-9, and JP Morgan bought them both for $1. I was looking yesterday, and JP Morgan went from the 8th largest investment bank in the world to the largest investment bank in the world, and the number of investment banks left is less than it was in 2008 by 25%. So even in finance capital, there's been a concentration that's taken place as a result of that massive slump. And it's clearly the case, there's a lot of evidence to show that over periods of time, the concentration of capital, the centralization of capital has increased as Marx expected, and crises speed up that process. There's the Swiss Institute of Technology, who are not economists. They sat down and they looked at all the companies in the world, the top companies in the world, and they see who owned what shares in the companies. And they found that everything was interlocked together. So that Barclays owned Petrobras's shares and Petrobras owned somebody else's shares. And then when you interconnected them together, they found that 740 companies owned 47% of all the corporate assets in the world. It's a massive amount of the assets in the world, and just 700 companies controlling the world's assets. So there's a massive concentration which continually takes place. Yes, small businesses go to the ground, but it doesn't mean that concentration doesn't take place in big companies as well. Well, because now it's not a national matter, it's an international matter. The struggle of capitalism is international now, as every day Donald Trump is proving to us that it's a struggle between capitalist states protecting their capitalist companies, and those capitalist companies are competing all the time. So concentration and centralization continues. The final question on credit and central banks is a very important one, because one of the phenomena of the period after the great slump, was that the central banks and the institutions of capitalism recognized they'd learned something from the Great Depression. They couldn't allow the banks to go down. They couldn't allow capitalism to melt. So they got the central banks not just to cut interest rates, which is what they did to begin with, but then to pump money into the economy by buying up all the bonds of the banks and the government themselves in a massive money splurge, which we now call quantitative easing. Something which was only done a little bit in the Great Depression. By the way, Keynes advocated quantitative easing in the 1930s. In 1931, at the depth of the Depression. In 1935-6, when he wrote the general theory, he dispensed with quantitative easing. He said it's not working. What we need is fiscal stimulus, or even the socialization of investment. In other words, the government should intervene in a big way to carry out the kick-starting for the economy. Actually, capitalism did get a fiscal stimulus. It was a war, and that transformed capitalism in the 1940s. But quantitative easing was done in a big way from 2008 onwards. And my conclusion from quantitative easing is that it hasn't. The long depression continues to exist. Quantitative easing has dramatically raised the stock markets. It's dramatically raised the bond prices, so that huge amounts of money have been made by an increasingly small number of 0.1% of the world's wealth holders because of their stock market boost. But it hasn't transformed the economy at all. It held the banks up with some reconcentration, but has not really done anything to solve the problem. And it's the same question on the general point of credit. The question is raised, doesn't credit enable capitalism to stumble forward beyond what's going on with the rate of profit in the productive sectors? And therefore, just looking at the rate of profit isn't really telling us what's happening with the economy. Well, Marx says that what credit does, it can extend the period of boom beyond. It's like, what's that cartoon where the road runner goes over the cliff and then suddenly realizes there's nothing beneath it. Profit's gone, but the credit has taken it out further, and it looks as though things are fine for a bit longer. And then suddenly, as you say, there's no money. There's lack of money. We need money, and you're not getting it. When a company goes bust, they usually say there was nothing wrong with the company. It was just a lack of liquidity. We didn't have enough cash that day. If the banks had just given us another week to tide us over, it would have been all right. But the reason there's a lack of liquidity is because the company is not making any profit, and at a certain point, the bank turns the tap off. And then there's no liquidity, but everybody wants money. And it's the same with the economy. That process goes on. So credit can extend the boom, but it also, therefore, means that when the crash comes, it's even bigger than it was before, because, as Marx says, not only is real capital expended, but fictitious capital, which is fictitious, because it turns out to have no profit base to it, is wiped out as well, and all the financial assets that companies and banks hold go to the wall, and you have an almighty crash, a financial crash, to go with the Great Recession. So credit is a powerful weapon for driving capitalist economy forward, even beyond its levels of profitability, but it also provides the alternative downturn that makes it worse. So the increasing size of the financial sector is an increasing unstable factor in world capitalism, but it's also a necessary factor in world capitalism because capitalist profitability is still not recovering, and they're forced to consider ways of expanding in false profits the use of credit institutions and other what Warren Buffett, the world's biggest investor, said were financial weapons of mass destruction.
Ele está muito bem disposto. Então, vamos para mais 3 perguntas. Acho que o primeiro colega que eu vi foi ali de óculos. Aqui, depois Alexandre e Vitor. Eu não sei seu nome, desculpa. Podia, por favor, se mover lá para o... Enquanto isso, Alexandre pode fazer pergunta. Ah, bom, Flávio está indo lá. Obrigado. Eu vou aproveitar enquanto... Bom, o microfone chegou, mas já que eu falei, vou aproveitar para fazer um comercial. Como eu disse, a gente não sequer procurou a mídia corporativa para cobrir o evento. Procuramos formas alternativas de divulgação que têm, de fato, atingido a esquerda e o público interessado na transformação social. Aqui está o Alcísio, ele representa a Central 3, que produz, na minha opinião, o melhor blog, podcast do Facebook, que é o Lado B do Rio. Então, procurem, eles estão cobrindo o evento e vai sair certamente, amanhã eles têm gravação, vai sair certamente coisas que já são produzidas aqui e o comentário deles sobre o nosso evento. Me parece que também tem uma cobertura, já está tendo, da mídia ninja, certamente alguma coisa vai aparecer por lá. Então, esses são os nossos canais de reverberação do evento na mídia, na nossa mídia, a mídia em que a gente acredita. É isso. Vamos lá, o colega, por favor.
Boa noite, me chamo João Pedro. Sou estudante de Economia da UFRJ e diretor do centro acadêmico do meu curso. A minha questão é a seguinte. Desde o final da década de 80, com a queda do dualismo que o mundo vivia, com o capitalismo e o socialismo, vê-se uma ascensão muito grande da nova fase do capitalismo, que é essa maneira neoclássica e essa ascensão do neoclassicismo. A minha dúvida e a minha questão é a seguinte. Você acha que o capitalismo precisa de pressões para que ele tome formas mais, entre aspas, humanistas, como, por exemplo, na geopolítica se debate muito a ideia de desenvolvimento a convite, que no caso seria a Coreia do Sul ou países nórdicos, pela proximidade que eles tinham geograficamente com blocos do sistema socialista. A minha questão é a seguinte: você acha que o capitalismo precisa de pressões externas? Nessa nova fase do capitalismo, quais seriam essas pressões externas? E qual o papel da China nesse processo, dado que ela tem ido por um caminho totalmente contra essa fase da austeridade? É isso. Obrigado.
Alexandre.
Boa noite, professor. Pegar carona aí que a gente entrou em crise, finanças. Então, queria fazer 3 perguntas em uma, na verdade. A primeira, sobre Grécia e zona do euro. Se a crise lá pode ser muito mais explicada por um espraiamento da crise americana, por causa da integração do sistema financeiro, tal como ela é hoje, como foi a crise de 2008, que depois virou uma crise bancária e uma crise das dívidas soberanas. Aí, entrando nesse ponto, se pela estrutura do capitalismo tal como ele é hoje, o capitalismo financeirizado, se há uma tendência, se na periferia, a crise estourar muito mais com uma crise da dívida soberana. Porque existe um padrão no mundo, agora com a desaceleração na periferia, de austeridade. A austeridade a gente vê na América Latina, a gente vê nas zonas nos países da periferia do euro.
E terceiro ponto, aí é uma curiosidade mesmo. Queria saber a sua opinião sobre como foi adotada a estratégia do Tsipras, do Syriza lá, e do Varoufakis em 2015. Porque houve oportunidade, na contramão do mundo, na Grécia, de construir uma alternativa de esquerda frente a uma crise. E havia uma base social forte nisso. O Syriza veio num crescente desde 2010, 2015 foi eleito. E aí, depois do referendo, houve uma clara capitulação. Eu queria saber a sua opinião sobre essa estratégia aí, porque havia outras alternativas, inclusive dentro da frente, que é o Syriza. Não sei se acompanha o Lapavit, sei que tinha um grupo de pesquisa. Também lutava por uma terceira via. Queria saber a opinião do senhor aí.
A última desse bloco. É, Vitor, aqui. Vitor Leonardo.
Boa noite. Talvez uma tentativa de tentar entender o caso brasileiro. Se você talvez tentasse refazer os cálculos de seus multiplicadores, quebrando antes e depois de 1990, para o caso do Brasil, que foi quando a gente fez um processo de abertura comercial que desmantelou a nossa indústria, possivelmente o gasto do governo pode estar vazando para o exterior, quer dizer, o multiplicador pode estar caindo por causa de um vazamento. Pode ser também o caso da Grécia e de alguns outros países que também tenham passado por um processo semelhante de desmantelamento da indústria, mas aí eu não saberia especificar exatamente qual seria o ponto de quebra.
Michael? Não.
The first question was, the end of the Soviet Union, did that create the external pressure on capitalism was broken with the end of the Soviet Union, and then we had neoliberalism. So are we saying that neoliberalism was a result of not having the Soviet Union anymore to stop capitalism going on an unbridled binge of austerity and neoliberalism? And in some way before that, they didn't do that because the Soviet Union was there. And so would this happen now if China's become a major obstacle to capitalism, and therefore this is a new external geopolitical force that will control capitalism? Well, my argument would be that there are internal contradictions in capitalism which have created these conditions, as we can see on the graph, and that all the efforts of neoliberalism, whether it was the Soviet Union that saved us from neoliberalism until it disappeared or not, have not really achieved a great deal of success for capitalism except stopping it from falling further. I think the internal contradictions of capitalism, the major capitalist economies, are what matters for these changes in policy by the ruling orders in capitalism. From the period when they accepted a welfare state, they accepted the conditions and pressures of the labour movement, which was in the period just after the Second World War, the golden age, it's called there. You can see the rate of profit is high. And then we have a significant fall in the rate of profit amongst the most world capitalist economies. You can see that fall there. I call it the profitability crisis. And what happened then? That was the most intense period of class struggle that we've seen in my lifetime in the late 60s through the early 70s. And then with the defeat of some of those struggles and the big recession of the 1980s, then you had an attempt to raise the rate of profit through the process of neoliberal policies, including in the post-global financial crash, the austerity crisis. But mainly neoliberal policies are policies to improve profitability and reduce the share of anything value going to labour through whatever method, through the reduction in government spending, through wages, through privatisation, through deregulation, through the reduction of the power of the trade unions and so on. I don't think that was due to the fact that the Soviet Union disappeared, because that didn't happen until the end of the 1980s, and actually all the process of neoliberalism was well under the way before then. So I don't think China is going to save us from neoliberalism. I think China is a new power on the scene. You can argue about whether it's capitalist or not, and I've just been to a meeting, if you go on my blog, and you'll see that's exactly what we argued about. And it's a continued discussion amongst Marxist economists. The majority consider it is capitalist. I don't intend to be one of those. So that's another interesting debate. But whether it is or not, it's clearly a now rival power economically, increasingly so for the US. And you can either have an alliance of capitalist powers to try and control China, or Trump thinks he can do it on his own on a one-to-one basis. So we're seeing a change in the geopolitical power there. Now, to raise the question of the euro, well, again, if you get into those pajamas and tonight after the cocktail party and work through with the search on my blog the word Greece, you will find about maybe about 20 posts on Greece covering exactly what has been raised here about Syriza, why it capitulated, what the alternative was, what the options were. I just make 2 points on Greece. First of all, the crisis of the euro, in my view, was not due to the fact that the euro exists or the European Union exists. It was due to the crisis of global capitalism. The global financial crash did not start in Frankfurt. It didn't start in Athens. It started in New York with the Wall Street coming down, and the slump began in the US, and like a tsunami spread across Europe and in Asia and then down to Latin America, swamping everything. And the weak little places, Greek capitalism was a pathetic capitalist class, a bunch of crony shipbuilders and other crooks who paid no tax, so that the government revenue was the lowest in Europe, and yet government spending therefore had to be high, so it started running huge deficits and big debts. And the Greek ruling class actually thought they were an imperialist power. They had banks where they were going to invest in the Balkans, and they were going to become the imperialist power of the Balkans. They had illusions, and then suddenly this tsunami came down and wiped them out. And of course, the answer for capitalism is not that the capitalists should pay for this mess, but the Greek workers should pay for it. And we had a 40% fall in Greek workers' incomes, and it's still going on. Only last week, further cuts were made in the pensions of Greek workers. German citizens are told that the Greeks are the laziest people in the world and don't lift a finger, which is why we can get to the deck chairs before them outside the pool. Well, that sort of nasty nationalist argument is rubbish. Who works the longest hours amongst the top capitalist economies in the world? Greece. Greek workers work the longest hours. Most of them don't have a job, but if they do, they work the longest hours because they have to work quite a long time, not only in the week, but throughout the year and onwards. And now their period of retirement is being dramatically increased and so on, and their pensions have been... I go to Greece quite regularly, and the pensions have just been destroyed. People have been destroyed. Population is right down. It made a huge struggle to fight austerity and to fight this capitalist austerity program. It elected a government that claimed it was going to do exactly that. When the government came up against the forces of the European leaders, the European leaders said, no way, if you don't do what you're told, we are going to kick you out of the euro and you can go down a hole like Argentina. The reply of the Greek people, the government said to them, oh, do you want to vote for long-term austerity or do you want to fight? And the European media said it was hopeless, you can't win, you can't fight. The government said, we're with you, you can decide yes or no. Hopefully they'll vote yes and we can get out of this. And they voted no, 60-40. No, we're not going to accept austerity. No, we want you to fight. The next day, the government agreed to the terms of the Troika. What do we learn from that? Well, it's a political issue, which we can discuss. But there were alternatives, quite clearly alternatives. We could discuss those, and they are discussed in my post in the blog. But the whole point about the euro crisis is that the euro crisis was a crisis of capitalism which swept through Europe. And yes, the weakest capitalist economies in the euro were asked to pay the biggest bill, although they're the weakest, while the strongest, particularly the strongest banks, were not allowed to suffer at all, and that was the consequence. Brazil in the 1990s, well, I beg for you, and I'll have a look, but you probably got the data better than me.
Is still another round? Are you okay?
Yeah, I'm okay, unless they're all bored by now.
No, I don't think so. O público está aí, o professor está surpreendentemente, enfim, relaxado após esse tempo todo falando. Vamos aproveitar, não é isso? Tinha um colega querendo fazer uma pergunta.
Boa noite. Professor, retomando a pergunta do companheiro aqui, em relação à crise do euro, à crise da Grécia, claramente você já respondeu que o problema é um problema do capitalismo global que chega a golpear, digamos, a economia europeia e as debilidades do euro. Mas aí há um debate sobre se o problema europeu, nesse momento, fosse um problema de arquitetura da construção da moeda única, o euro, ou se fosse um problema de balanço de comércio, digamos, entre os países europeus e a Alemanha, um problema de balanço exterior. Essa é a primeira pergunta. A segunda pergunta é em relação à previsão de acabar o quantitative easing, agora em 2019, não sei. Então, se essa situação de que ele corre e depois cai, eu sou italiano, Itália tem aquela dívida gigante, e todo mundo diz que como o Draghi acaba de comprar os bônus italianos, estamos na crise imediatamente, como naquele momento de 2011. Obrigado. Muita propaganda também, mas acho que tem algo de verdade. Tem.
Perguntas? Tem mais um colega ali. Gentil.
Tudo bem. Boa noite. Meu nome é Gentil Coraza, professor da Federal do Rio Grande do Sul, em Porto Alegre. A minha pergunta é sobre o caso de Portugal. O que há de específico em Portugal que seguiu um caminho um pouco diferente, menos austero e teve maior sucesso que outros países europeus? O próprio euro não conseguiu bloquear esse caminho próprio de Portugal. E por que outros países não conseguem fazer a mesma coisa? Obrigado.
Mais alguma pergunta? Tem um colega aqui, por favor.
Oi. Bem rapidamente, quanto a este gráfico aqui, eu só não quero que essa dúvida para casa, mas o senhor disse, se eu entendi bem, que a austeridade aumenta o lucro. Porém, justamente no período em que a austeridade está mais presente, que é o caso do neoliberalismo, em que ela vira regra, se tem as menores taxas de lucro da história. Então, eu queria que o senhor explicasse isso e dissesse se tem alguma coisa a ver mais com a crise estrutural ou se é alguma outra coisa que eu não peguei nesse meio campo. Obrigado.
Vamos lá. Esse é o último bloco. Então, eu vou pedir, imagino que a gente já explorou muito o nosso colega, que está de boa vontade respondendo perguntas, mas nós encerramos com essa pergunta e com as respostas do professor Michael.
It's only because you want to go for a cocktail, I think. I could go on all night. Again, the euro. The alternatives, it's partly a tactical question and partly a question of strategy, which is not the same as tactics, about what is the way to make, when we have an issue like Greece, the Greek people has, you have to ask, this is where I start from, what would be in the interests of Greek labour, of Greek working class? Not what's in the interests of one section of the Greek capitalist class, or the other section, or the Germans, or it's like the same question we have in Britain at the moment on Brexit. Should we leave the European Union because it's a capitalist club, which is an argument of the left? Should we stay in the European Union, which is what the trade unions say, because we get some benefits out of it, and it's better for trade and therefore for the economy, or not? I would start, well, what's in the interests of the British working class at this point? Which is the best? Because, as Marx said about free trade and protection, it's not a clear question one way or the other. One section of the capitalists want protection, the other section wants free trade. Usually the section that wants free trade is the big, strong imperialist power. And the one that wants protection are the small capitalist ones that are trying to grow in front of the big, strong imperialist power. But what's in the interest of the class, the labour class? And it's not always clear exactly. You have to look at the evidence, and you can weigh that up on Brexit. And then the same applies to the Greeks. Was it the best alternative, if you're going to reject the Troika, was the best alternative, therefore, to leave the Euro and the European Union and go out on your own? My reply to that, you can read it in my blog, was, well, what's in the interests of Greek labour? If you're going to go out on your own with Greek capitalism, with the same old crony shipbuilders and all the other people that have brought us to this level, and the dentists don't pay their tax, and we're not changing anything structurally in Greece, we're just leaving the Euro, we're just leaving the EU, and we're going to trade with Argentina, if that is the option, then I'm not sure that's in the interest of Greek working class. And in fact, the Greek working class, when they voted against austerity, did not vote against the Euro. In fact, every public opinion poll on the question of the Euro in Greece, even now, is in the favour of staying in the Euro, because the Greek working class, being reasonably sensible and very political, have thought about this, and they're not sure that going out on your little boat on your own with the captain in the boat still being the same bunch of crooks that you had before is necessarily a solution. The alternative is staying at home and facing the great German capitalist warship coming down. Which is it? It's not much of an alternative, is it? The only solution would have been a European-wide movement to defend Greece and against austerity in all those countries, and to fight for a restructuring of the European economy in a socialist direction. But that option, of course, was not an option which had any traction in the wider labour movement in the rest of Europe, but particularly in Greece it did have traction, but not sufficiently to change the course of events. So we can analyse that again, but that would be the way I would pose it. It's a strategic and tactical question for what's in the interests of labour. Same applies to Italy, which has been raised. Italy is a much more important country for the European Union and the Euro. If Italy leaves the Euro and the European Union is finished. The Euro is certainly finished. Germany will set up its own German Euro with Holland, the Netherlands, Poland, Denmark, Denmark don't want to join, but France. There'll be a core Europe mark, which will be Euro mark, which will be way stronger than the Euro, and they'll kick out Spain, successful Portugal, Italy and the others, and they will have a strong Euro. That if the Italy is out of the Euro. The Italians don't want to leave the Euro for the same reason the Greeks don't, that they don't see the alternative being offered, being led by Salvini and Di Maio into a new uncharted world of Italy competing in world markets led by those two, is not something that appeals, I think, to Italian voters. And that's why both those leaders in the new government have now calmed down all talk about leaving the Euro, because they realise that's not going to win them votes. So there is a dilemma for the Italian working class between austerity, as imposed by the European Union, or demanded and will be demanded, or what is it? Some sort of kick out the immigrants and continue with the capitalist system as it is, but in some way without meeting the European Union's rules. It's not a very palatable alternative, and at the moment there isn't any clear third way, as you mentioned, which can lead to a solution. So this situation will smoulder on. But if Italy does go out, which I don't think it will for the various reasons I've described, except if we have a major slump in the next 2 years, then all bets are off. All bets are off about what happens in Europe if there's a major slump again, because then this issue will be much more tense than it was before. Portugal has made a modest recovery from the situation it was in. Its slump was quite severe. Its employment position is still terrible. Its productivity growth is appalling, but it's made some limited recovery without much fiscal spending on the part of the government, just slightly less austerity than before. It's still meeting the targets that's set by the Troika and the rest. So it's made a modest recovery, but it will soon be swept away if things change. I don't see this is an indication of how to proceed as an alternative. If we're saying that we don't want a government that wants to impose vicious austerity, we don't. And if we replace it with a government which is less austere, not particularly Keynesian, there's no budget deficit expending going on in Portugal, just they're not hitting the workers quite as hard as the last government did. And the new Spanish government won't be hitting the workers quite as hard as the last Spanish government with. And as the European economy is picking up anyway, it is easier. That's always the thing. If the tide rises, then you don't see the rocks anymore, and everything looks great. It's when the tide goes down and the rocks are exposed again. And so when the tides rise, all the boats out in the basin there in Rio will rise with it. And Portugal looks great as things rise. Spain's looking a bit better. France is looking a bit better. Even Italy, until the crisis, was looking a bit better. But that may not last in the recession. Profitability, well, surely if austerity increases profitability, why isn't it shown on my map? And the graph, well, first of all, austerity actually wasn't really applied in the way that, well, it was applied from the 1980s, early 1980s, and we do see actually a recovery in profitability to some extent. It's a limited one in the whole scheme of things over 150 years, but nevertheless, in our lifetimes, that's quite certainly in my lifetime, I mean, 40 years of neoliberal austerity, it's quite a long time in our lives, and it's achieved a little bit of a recovery up until the Great Recession, and then it drops back down again, and then we had a bit more austerity in some countries, and it recovers, but it's basically slipped away in the Great Recession, and I can show you how I didn't extend the map for the world, because I don't think I've done it yet, but for the US you can see a relative recovery in this period, mainly because we've seen a cleansing to some extent of the productive assets, so that growth of profits have improved. But I don't think that that map does not refute the argument that austerity is, well, the argument is the other way around as far as I'm concerned. More spending does not lead to improvements in growth much. More government spending. More austerity doesn't necessarily lead to improvements in growth either. What matters is what's happening to profitability and investment. And profitability isn't determined by austerity, because business investment is taking place on the basis of business profits. Austerity might make a difference one way or the other, but not very much. That's what my evidence shows, I think. Don't worry about so much. If you want to know what's going to happen in the world economy, or in your economy, or in any major capitalist economy, it's not a question of whether government spending is up or not, particularly. That's not crucial.
Obrigado, nosso grande Michael Roberts, que fez essa extraordinária exposição.